it's the same learning objective. Let's start at the new one. All right, so remember with Social Security and Medicare tax, when they're an employee, the employee and the employer share that tax 50-50. So the employer withholds from the employee's paycheck, and the employer pays an amount from that toward the employee's Social Security and Medicare taxes. If you recall, we have, Social Security, and remember both of them together are called FICA. Social Security is also known as OASDI. Medicare tax is separate from that, so Old Age Survivors and Disability Insurance, FICA, Federal Insurance Contributions Act. We have the SECA tax as well, which was Self-Employed Contributions Act. So we have the employers portion, and we have the employees portion. So for Social Security, 6.2%, 6.2%, total 12.4. We have a wage base. So up to 147, and this is for 2022. I think in 2023 it's like 160 and change. Okay, so that means any amount over that is paid over that during the year per employee, there is no Social Security tax that is withheld. Same, and that again applies with self-employment tax, that SECA tax, which we went through as well. Medicare tax, 1.45%. 1.45%. So 2.9% up to infinity. There is no wage base for Medicare tax. Starts at, and both of these start at the first dollar, right? So you make $1, you're going to have those taxes taken out. So we do have, remember, that additional Medicare tax, which is not paid by the employer. It's only paid by the employee, and it is 0.9%. And it starts at 200,000 wages. The employer is going to withhold those starting once the employee once their earnings start to exceed $200,000. What else do I want to say about that? Remember all that stuff? Okay, cool. Again, so it's 147 that you're going to use. Now, that additional Medicare tax, there's actually, it only applies, it has different starting points based on filing status, but the employer doesn't withhold based on that. They base it just on 200,000. So it's very possible that if the individual is is married filing separately, married filing separately, they may be over withheld because the amount is actually 125, but the employer, or actually under withheld. It starts at 125, but the employer's not going to start withholding until it reaches 200,000.
Would you have to pay additional in, and like also for like married filing jointly, so it says 250 there, but if they start holding at 200, would you get a refund?
Yes, if you are, so that gets, just like income taxes, that will get reconciled on the tax return. So if you've overpaid, you'll get a refund. If you've underpaid, you'll have to pay additional at the time that you file your taxes. Okay. So again, for self-employed, so here's our total. So 15.3%. This is also self-employed tax rates. So self-employed individual, remember, is considered the employee and the employer, so they get the privilege of paying both. And that 147 max, this applies per taxpayer per year. So if the taxpayer has multiple jobs, and at each job, at neither job do they exceed 147, but when you combine it, they exceeded 147, then they're gonna get a refund. They will have overpaid Social Security taxes, and they'll get a refund at the time that they file their taxes. Okay. So here we've got Lamar. Lamar earned $72,000 during 2022 without regard to federal income taxes. The employer is going to withhold $44.64, so 6.2% for Social Security tax, $1,044 for Medicare taxes. The employer is, so that's the amount that's going to be withheld, but the employer is also going to pay that amount on his behalf. Okay. Haito earned $149,000 during 2022, so he's over 147. So $2,000 of his income is not going to be subject to Social Security tax. His employer is going to withhold Social Security taxes of $91.14. So the employer also maxes out, okay? And Medicare taxes of $21.60. So that's going to be, the Medicare taxes are going to be based on the full amount. Social Security taxes are going to be based on the 147. For a total of $11,274. The employer pays its share, sends it to the federal government. So gathers both halves, sends it to the IRS. Now, what was I gonna say? I mentioned that an employee will get a refund if they're overpaid. The employer doesn't. So, for example, you've got like I said, you've got an employee that worked in two places. So they made $100,000 first half of the year at one place, $100,000 second half of the year at another place. The employer has withheld the full Social Security tax. Each employer has withheld the full Social Security tax. The employee is over withheld though. They maxed out at 147. The employee is going to get a refund. The employer is not going to get a refund. They still owe up to 147 for each employee. Does that make sense? So just because the employee has maxed out doesn't necessarily mean that the employer has maxed out if that employee's maxed out because they've got multiple jobs. Does that make sense? Okay. Tips. Everybody's favorite subject. So remember, tips are added in to their taxable wages. But it's just kind of like a prepayment of the amount that the employee is due. Employers are allowed to pay less on an hourly basis, and there's an amount that is assumed for tips. There are two different ways that the employer can account for tips. They can have the employee report their tips every month. So for example, what is today? Today's November 9th. By tomorrow, the 10th, because the 10th of each month these are due, an employee could report all of their tips for the prior month. And it starts at $30 a month, I think. Once you reach $30 a month, then you report those tips. If you made 32 though, you have to report all 32. You don't get it. Yeah.
Is reporting tips the same for like an individual that's self-employed?
So that would be, those tips would be considered self-employed employment income.
So it wouldn't be like tips, it would just count as part of the income?
Yeah.
Okay.
Yeah. Yes. So for the employee can report the exact amount of tips to the employer by the 10th of the following month, and then what the employer is going to do is withhold income taxes, Social Security taxes, and Medicare taxes on the tips that were reported, as well as the amount of pay that the employer pays, as well as the wages. So oftentimes what happens for tipped employees, if they're only making $2.13 an hour, which is the minimum wage for tipped employees, I don't know how many are actually still making that. I don't know if anybody knows these days. I think most folks are.
Didn't that go up? Isn't it like $4.35 now or something?
Yeah, I thought it was.
213. Pretty sure, you can look it up. It may be for a different state. Or for federal employees have all different rules. But that minimum wage for tipped employees, because the full minimum wage is $7.25 an hour, but the assumption is that $5.12 of that is going to be made up in tips.
For Iowa, it's $4.35.
Is it? When did that go up?
I don't have any idea.
Okay,
In Hawaii, it's $11 an hour.
yeah, okay.
But yeah, $4.35 an hour.
$4.35 an hour, okay,
Mhm.
well, thank you.
Yep.
At the federal level, it's $2.13 an hour. So it's gonna be whatever the state, whichever is larger, the state's minimum wage or the federal minimum wage. Alright, so there are states where there isn't a separate wage for tipped employees, so it would be the $2.13 an hour. But point is, the tips are considered taxable income. And there are two ways that can be accounted for. Actual tips can be reported to the employer, have to be reported by the 10th of the month, and then that gets added to the employee's pay, and withholding is, amounts are withheld based on the total amount, the tips and the wages. Or the employer can use a tip allocation system where they are assuming it has to be, so if the employer with more than 10 employees, they can assume a tip amount of at least 8% and add that. So, if you're going out to eat and you're leaving less than 8%, it very well could be that the tipped employee is paying tax on amounts that they didn't actually get. But usually that's not the case. Overall, it's gonna work out. But thank you for bringing that to my attention. I'll have to look at the history of that because I did not realize that for Iowa it went up. All right. Anything here? Any questions? Oh, I guess they're still talking about tips down here. So, oh, and the allocation, so if they choose to allocate the tips, there are three different ways that they can calculate those allocated tips, as long as it's not under 8% of what their sales would be. They can use gross receipts per employee, hours worked per employee, so assuming how much is made on an hourly basis on tips, or some other agreement, as long as it's agreed upon by the employer and the employee.
So if the employee actually only makes, say, 5%, does the employer still have to withhold 8 even if they're saying that
No.
they?
So that's the last part here. So for allocated tips, for actual tips reported, they do have to withhold. For allocated tips, though, they do not have to withhold Social Security or Medicare tax on those amounts. Now, they still would withhold income tax. Because that income tax is gonna be, if they're over withheld, they're gonna get it back, right? But with Social Security and Medicare tax, it's not. But they don't withhold. But that Social Security and Medicare tax is still gonna have to be paid by the employee then when they file their tax return. All right, questions? That's a big section. Whee!